Welcome back, guys. Today we're going to take a look at Motorola Solutions. Over the past 5 years, they are up 133%, so quite strong performance on Motorola. Will this continue? Maybe, probably not, based on their price earnings and their valuation, but we're going to take a closer look at them today. They basically make telecommunications equipment like cameras and security devices, as well as, like they used to make those flip phones, I guess. But their revenue growth has actually been quite strong, and so let's dive in here. Yeah, they also sell some software, um, yeah, video security devices, infrastructure. At least from what I saw, it was mostly cameras and stuff for security. Oh yeah, here's their financials here. Their revenue growth has been pretty solid, and their earnings have doubled because of their margin expansion. So their net margin has expanded every year for the past 5 years, which is really good to see. Their statements. Oh, did I show you the price to earnings ratio too is 46, so it's quite steep. Yeah, taking a closer look, their revenue has been growing pretty steadily at about 7 to 8%. Over the past 3 years, it was up 10% a year. 2020, they had a drop, so yeah, pretty steady, probably like 6 or 7% a year, pretty consistently. And then their earnings have been expanding, basically because their expenses aren't going up as much as their revenue. Pretty basic. Their last quarter, they actually took a loss, so they had a unusual income expense, so they actually took a loss last quarter. But it's not that big of a deal. It was just an unusual expense. So not too big of a deal there. Shouldn't affect them in the long term. And they do buy back a little bit of stock. Their balance sheet, they do have quite a bit of debt, so we just have to take that into account. 5.3 billion in debt. And then their cash flow statement, they pay a bit of a dividend and then they buy back stock with the remaining cash flow. So they return whatever they have back to shareholders, it looks like. For their margins, their ROIC is pretty good, 20%. Gross margin at about 46 to 48%. And their net margin has been slowly expanding up to that 17% mark. And the analysts are projecting 20% for this year, which I don't think they'll be able to hit, but we usually go with the analysts on this channel. So the outlook, they're expecting 7 to 8% revenue growth, and yeah, for their full year, they're expecting 7% right there. Yeah, let's just go to the analysts here. Analysts are projecting 13, earnings per share going to 14, and their revenue being 7% growth, right in line with expectations from the company. 10.7 billion going to 11.3. They're expecting a slowdown down to 6% into 2025. In terms of their stats, we could check their short percentage is only at 1%. That's a green flag in their short percentage. You kind of have to be crazy to short a company with such a strong uptrend. Let's take a look at the model that I have. I have their estimates here. Buybacks to 700 million. That's what they've been doing. Net debt of 5.3 billion. Discount rates of 10% because I want the 10% return on all my stocks. Exit multiple of 24. That's still higher than most stocks in the market. Right now they're trading at like 40 or 46. So right now they're trading at a very, very high multiple, and you do need that multiple to come down substantially. Usually, with a company that's kind of low growth, and I'm not really quite sure what the moat is in this business. I guess it would be like once you're in their ecosystem with their camera equipment and stuff, you probably continue to buy their equipment, which would make sense. But yeah, this is their earnings model. I have their earnings at 8% and then declining down to 6% in 2029. With this assumption, their fair share price comes out to 326. After accounting for debts, it goes down to 294. Probably put them around 320, 310, somewhere in between there. And then the revenue margins model. So they're projecting their profit margin to be 20% this year. It's probably not going to happen. It's probably going to be more like 18%. and then maybe they grow that up into these ranges. It's definitely possible that they end out at a 20% net margin. I think that this is a pretty realistic scenario for Motorola. Also, they were projecting 6% into 2025, not 7. So maybe we do this. It's kind of a low growth business, and I think that this is quite realistic for Motorola. So we're looking at a fair share price here of 256 to 288, and with their current price being 375, they are looking a bit pricey today. Maybe expecting like a 5% return. Yeah, I'd say you probably expect like a 5% return if you held this stock, which is still better. Well, it's still about where bonds are trading at right now. But yeah, I think it's kind of pricey. It's probably going to be pretty consistent, so it's not a terrible company, but I just think that the returns probably aren't going to be great moving forward. So yeah, that's my thoughts on Motorola. Let me know what you guys think in the comments. And yeah, hit that like button. I'll see you in the next one.